Well, hello there. Today we're diving into the exciting world of finance and taking a closer look at four companies making waves in the market: Apple, Centamin, Wikis, and Ocado. These companies, each a giant in its own right, have been making headlines for very different reasons, from hefty tax bills to impressive growth figures. It's a real mixed bag, and that's what makes it so fascinating. So, why should we care about these companies and their recent ups and downs? Well, for starters, they offer a snapshot of the current economic climate and the forces shaping different industries. Apple's tax woes highlight the complexities of international tax law. The tech giant has been embroiled in legal battles over its tax practices, which have drawn scrutiny from regulators around the world. This situation not only affects Apple's bottom line, but also has broader implications for how multinational corporations navigate the intricate web of global tax regulations. Centamin's takeover bid showcases the consolidation happening in the mining sector. As smaller companies merge or are acquired by larger ones, the landscape of the mining industry is changing rapidly. This consolidation can lead to increased efficiencies and cost savings, but it also raises questions about market competition and the future of smaller mining operations. Wik's fluctuating fortunes reflect the challenges facing the retail sector. With the rise of e-commerce and changing consumer preferences, traditional brick-and-mortar stores like Wix are under immense pressure to adapt. The company's recent performance highlights the ongoing struggle to balance in-store and online sales, manage supply chain disruptions, and meet evolving customer expectations. And Ocado's success story underscores the unstoppable rise of online shopping. As more consumers turn to the convenience of online grocery delivery, Ocado has positioned itself as a leader in this space. The company's innovative use of automation and technology has set it apart from competitors, driving impressive growth and expansion. Over the next few sections, we'll unpack each company's story, examining the factors driving their recent performance and what the future might hold for them. We'll delve into the strategic decisions, market trends, and external influences that have shaped their trajectories. We'll keep things simple and straightforward, avoiding jargon as much as possible. Our goal is to make these complex financial topics accessible and engaging for everyone, whether you're a seasoned investor or just curious about the market. After all, understanding the markets shouldn't feel like deciphering a foreign language. We'll break down the key concepts and provide clear explanations to help you make sense of the financial world. So buckle up and let's get started. There's a lot to explore, and we're excited to take you on this journey through the highs and lows of today's market movers. Let's start with Apple, the tech behemoth that needs no introduction. Known for its innovative products and massive global presence, Apple has become a household name. But even giants have their headaches. Recently, Apple has found itself in a bit of a tussle with the European Union over a rather large sum of money. 13 billion euros to be precise. This isn't just pocket change, it's a significant amount that has caught the attention of many. That's quite a hefty tax bill, even for a company as cash-rich as Apple. To put it in perspective, 13 billion euros could fund numerous public projects or even small countries' annual budgets. So what's the story? How did Apple end up with such a massive tax bill? Well, back in 2016, the European Commission, the EU's executive branch, ruled that Apple had received illegal tax breaks from Ireland. This ruling was a bombshell in the corporate world. Essentially, the Commission argued that Apple had struck a sweetheart deal with Ireland, allowing it to pay significantly less tax than it should have. This deal allegedly gave Apple an unfair advantage over other companies. Apple, of course, appealed this ruling, arguing that it had always followed the rules and paid its fair share of taxes. They claimed that the tax arrangements were legal under Irish law. However, their appeal was recently rejected, and the 13 billion euros bill still stands. This decision has sent shockwaves through the business community, raising questions about the future of corporate taxation. This decision has sparked quite a debate about international tax law and whether big corporations like Apple are paying their fair share. Some argue that this ruling is a step towards greater tax fairness, while others believe it could stifle business innovation. This whole saga has undoubtedly cast a shadow over Apple, even if it hasn't significantly impacted its stock price yet. Investors are watching closely to see how this will affect the company's financial health in the long run. It remains to be seen how this tax dispute will ultimately play out and what it means for Apple's future in Europe. Will Apple find a way to negotiate a lower bill, or will they have to pay the full amount? And what precedent will this set for other multinational corporations operating in Europe? Only time will tell. One thing is certain. This 13 billion euros tax headache is far from over, and it will be fascinating to see how it unfolds. The outcome could have far-reaching implications for global tax policies and corporate strategies. As we continue to follow this story, we'll keep you updated on any new developments. Stay tuned for more insights into the world of international business and finance. Next up, we have Centamin, a gold mining company that's been making headlines after receiving a rather tempting takeover bid. AngloGold Ashanti, another major player in the gold mining industry, has offered to buy Centamin for a cool $2.5 billion. That's a lot of gold. This news sent Centamin's share price soaring as investors cheered the prospect of a lucrative deal. And who can blame them? AngloGold Ashanti's offer represented a significant premium to Centamin's share price before the announcement. This proposed takeover is a sign of the times in the gold mining industry. With gold prices relatively high, larger mining companies are looking to consolidate and expand their operations. By acquiring Centamin, AngloGold Ashanti would gain access to its valuable assets, including its flagship Sukari gold mine in Egypt. It's still early days, and the deal isn't finalized yet. Centamin's shareholders still need to vote on the offer, and there are always regulatory hurdles to clear. But if the deal goes through, it will be one of the biggest mining takeovers in recent years. Wick is weathering the storm. A look at their recent performance. Now let's move on to Wickes, a well-known name in the UK home improvement market. They haven't been having the easiest time lately, with both profits and revenues taking a bit of a dip. Not exactly the news you want to see as a business. So what's been going on? Well, like many businesses in the retail sector, Wickes has been grappling with a challenging economic environment. Rising inflation, supply chain disruptions, and a squeeze on consumer spending have all taken their toll. Despite these headwinds, Wickes' share price has actually held up relatively well. This suggests that investors believe the company is fundamentally sound and well-positioned to weather the current storm. They've also been encouraged by Wickes' management team, who have reaffirmed their profit projections for the year. Only time will tell how Wickes will navigate the challenges ahead. They'll need to adapt to changing consumer behavior, control costs, and find ways to differentiate themselves from the competition. But for now, it seems investors are willing to give them the benefit of the doubt. Ocado riding the online grocery wave. Last but not least, we have Ocado, the online grocery retailer that's been on a tear recently. This company has been making waves in the industry, capturing the attention of both consumers and investors alike. They've been growing at an impressive clip, consistently outperforming their rivals in the fiercely competitive UK grocery market. This growth is not just a flash in the pan, it's a result of strategic planning and execution. Ocado's success can be attributed to several factors. Their ability to stay ahead of the curve and adapt to changing market conditions has been crucial. First, they were early movers in the online grocery space, establishing a strong brand and loyal customer base. This early entry allowed them to build a robust infrastructure and gain a significant market share before many of their competitors even realized the potential of online grocery shopping. Second, they've invested heavily in technology, developing a sophisticated logistics network that allows them to deliver groceries efficiently and cost-effectively. Their state-of-the-art warehouses are equipped with advanced automation systems which streamline the picking and packing process, reducing errors and increasing speed. Third, and perhaps most importantly, Ocado has tapped into the growing consumer demand for convenience. In today's fast-paced world, more and more people are choosing to do their grocery shopping online, and Ocado has been a major beneficiary of this trend. Their user-friendly app and website make it easy for customers to place orders, track deliveries, and even find recipe ideas. In today's fast-paced world, more and more people are choosing to do their grocery shopping online, and Ocado has been a major beneficiary of this trend. The convenience of having groceries delivered right to your doorstep cannot be overstated, especially for busy urban dwellers who are always on the go. Their recent performance is a testament to their winning formula. Ocado has reported strong sales growth, expanded their market share, and continued to invest in innovation. This commitment to continuous improvement has kept them ahead of the competition. They've reported strong sales growth, expanded their market share, and continued to invest in innovation. Their innovation lab is constantly working on new ways to enhance the customer experience, from improving delivery times to offering a wider range of products. The future looks bright for Ocado, but they can't afford to rest on their laurels. The online grocery market is becoming increasingly crowded, with established players like Tesco and Sainsbury's upping their game. Ocado will need to continue innovating and finding new ways to differentiate themselves from the competition. The online grocery market is becoming increasingly crowded, with established players like Tesco and Sainsbury's upping their game. These competitors are not standing still, they are also investing in technology and expanding their online offerings. Ocado will need to stay vigilant and agile to maintain its lead in this dynamic market. Looking ahead, Ocado has ambitious plans for the future. They are exploring new markets and developing cutting-edge technologies to further enhance their service. With a strong foundation and a clear vision, Ocado is well positioned to continue riding the online grocery wave for years to come.